Good morning, everyone. This is Nate G. It is Tuesday, July 22nd, and we're going to do another video on the opening range break. I'm using the 15-minute opening range break. So, as you can see, I use an indicator to just mark the first 15 minutes of the opening range, and then it just puts lines in for me. There's tons of these on TradingView. There's probably other indicators if you use other services other than TradingView. But I know I've found like 5 or 6. This one is by LuxAlgo. It's a free indicator, but it's by LuxAlgo, which is my sniper indicator, paid indicator. But this one is you can just type in. I think it's, if you like it, it's opening range. I'm not sure why that's not coming up. Opening range breakout, find the one by LuxAlgo, and then when you're in it, you can set whatever the opening range is that you want, right? 15-minute, 10-minute, 3-minute, hourly, whatever opening range breakout you're looking for, it'll draw these lines for you, and then it puts a little arrow when the opening range breaks. But it's also quite easy to just have a chart open of the SPX and put it on 15 minutes during the opening, the opening bell. The first 15 minutes, you see you get this candle, right? This dotted line is the day break, right? So we get this first 15-minute candle right here, and as that candle closes within that first 15 minutes, you just go in and draw a line at the high and a line at the low, and then when you get that break, you can take that opening range break. And what I'm doing generally is marking the 15-minute opening range break just using an indicator, because it just kind of does it for me and it's nice. And then I am waiting for a 5-minute candle to break below or above the 15-minute opening range. Okay, and I'm playing a 15-minute opening range breakout to the downside. I'm taking a bearish trade on that, and then in the inverse, like yesterday, I'm taking an opening range break right to the upside, and I'm playing that long. And I'll explain how I'm playing those and what I'm looking for when I get them. So today's, for instance, was an opening range break to the downside. It happened relatively quick, but this candle closed here. And the way I play these is I'm using a credit spread. So if it breaks to the downside like it did today, I am using a call credit spread, okay? Which means I am selling an option, right? I'm the option seller for 0 DTE options. So all of these are options that expire today, right? 0 DTE. That's awful handwriting, but anyway, I'm selling a contract, and then I'm buying one behind it, right? So it's a spread. So my max risk is capped, and my max upside is also capped. But the reason I like to sell a credit spread is if this thing just goes sideways, and this is actually a great example that we'll use today, then as long as it stays in this case below my sold credit spread, I can also profit. So if it moves down and away, I can profit in that movement. And if it just kind of goes sideways, I can also profit in theta decay. Okay, so there's 2 ways that I can profit. And the way I decide what my credit spread will be, it's a $5 wide credit spread on the SPX. You can do this on the SPY or the XSP. I recommend the XSP. because the SPX and the XSP are both cash settled vehicles, right? So if you do want to let this expire for 100% or for a full loss, obviously we don't want to try and do that, but you can just let that option expire and it'll cash settle in your account, versus something like the SPY or the Qs or Apple or anything else. You do risk, assignment if it goes against you and some other things, and you have to close it. And then also the SPX and the XSP have some tax advantages to them. If you are profitable trading those, you get 60% of your profits. Look this up and read it, please, so you understand it. But 60% of your profits from trading those vehicles, those two vehicles, are taxed at a long-term capital gains rate, and 40% is taxed at a short-term capital gains rate. So there's just a lot. They both have 0 DTE, which I want to play. So there's just advantages to playing those over the SPY. In my opinion, the XPX is more expensive, is higher risk. But you can start with just one contract to kind of get a feel for it, or you can even start with like one contract on the XSP and trade a $1 wide spread just to get the feel for these. You can do it on the SPY too, but just know you need to close it before the end of the day. All right. So the way I'm deciding my spreads is as this opening range develops, 15-minute opening range develops, and it looks like it's going to break to, let's say in this case, it looked like it was going to come into the downside. I am looking at what contract is sitting at the top end of this range, and then that's the one I'm selling, and then I'm buying one behind it. So in this case, I did the 63.15s because they're in $5 increments, right? So I did the 63.15s, which was slightly above the 63.12s, which is where this was kind of the top end of the opening range, and then I was buying the 63.20s behind it. Okay, so that was the call credit spread that I purchased today, and I got this for $1.30. $1.30 per contract. So I got a credit of $1.30 into my account. All right. And so the way I play these is I'm looking for 50 to 55%. I mean, 50 is kind of my mark, but sometimes depending, I'm looking for 50%. I'll buy it back for my profit target, right? And then if it goes against me, my stop loss is basically 2x, right? So it'll be 100%. So if this spread got to $2.60, I would be stopping out. Okay. No, I don't always round up, Vince. Sometimes if the spread is a little bit wider, I'll take a slightly lower where I'll sell the credit spread. What I'm generally looking for in the credit in this right here, I'm generally looking for anywhere from 80 cents per contract to $1.50, right? And so today's was good. This was a nice credit. If you do at the money, you're going to get with a $5 wide spread, your total money at risk per contract, or total money invested is $5 basically, or $500 per contract. If you're taking a credit, right, then you're getting $1.30. So your max risk on this is $3.70, right? So if I let that go completely against me, because it's the difference between $1.30 and $5, right? Because I got a credit of $1.30. And so when I put this trade on, and this is a great example, there's two of how you can profit in my one smaller income account. So I'm gonna erase all these lines here. Sorry, all these drawings, but that's the credit spread that I took today on the break right here as this candle started to close, and I got $1.30 in credit for it per contract. All right, so I got $130 per contract into my account, and I immediately set in my smaller account for this trade here, and I'm going to move it to a 2-minute just so you can see how it plays out a little bit more. As we broke this low here and I bought that call credit spread, I got $1.30, right? And in my small account, I immediately put on an order to take this off at 60 cents. Okay, so a little over 50%. And I like to put that order in there. And what was funny is, so I did this in 2 accounts, right? So I got 130 and 130. And in my large account, I didn't put an order in. And in my small account, I did put an order in, an exit order for 60 cents, right here. Okay, at this time, I entered the trade and I put an exit order for 60 cents. I had to take the dog out to use the bathroom, right? And in 4 minutes, as I came back in, this had already filled, right? So today's trade took all of 4 minutes to enter and exit for 55-ish% of the trade, right? That was down here as we spiked down into here, okay? This one I've left on. This one is still on, all right? So I still have that 130. If this expires today and it stays below this 63.15, I'll get the full 130 per contract. I'll just take the whole thing home. But here's a good explanation. So as we dropped quickly, that 60 cents that I put in filled. So I bought it back for 60 cents, and that trade was done in 4 minutes, right? Now we've bounced and we've gone sideways, but what do you think that trade is worth right now? If I wanted to sell it, if I wanted to buy it back right now for profit, what do you think it's worth here? I mean, you can probably look it up, but this trade, because of theta decay and sideways action, is bouncing around. Right now, the midpoint is about 45 cents, right? So I could take this off right now for larger profit than I took it off down here, because there's 2 ways to profit from these: actual movement and or sideways theta decay, because there's 0 DTE options and I am the seller of the spread. Does that make sense? So, and I've been debating taking this one off because really my target's 60 cents. I'm already past that. If we were still trading down here somewhere, like if we had fallen apart today, I would leave it on to potentially get the full $1.30 per contract. But we're kind of bouncing around here. The Vold is staying above. It's above 2 at the moment. I don't really love that. So I'm probably going to take this off in a second, because the chance that we're going to bounce back up and maybe cross this level of 63.15, there's kind of a high potential, and I'd like to take my profit and go home. My first trade, I was done trading this in 4 minutes, right? So that's how I do the credit spreads in reverse, right? Yesterday, I took a put credit spread. So I was selling, I think I sold the 63.10s and bought the 63.05s behind it, if I remember correctly. So I was a little bit up here, but we just broke this so fast, and was just gone that only one of my accounts filled. And I think it filled for 90 cents and I took it off for 45, but that one didn't take that long either. And so the nice thing about these is once you get comfortable getting in and out of credit spreads and you get comfortable with the system, then you just size up, right? And you just start sizing up. And this is a great income-based strategy. Just kind of do it every single day. Right now it's trading, for me at least, it's trading at about a 86, 87% win rate. I haven't added today's trade into that percentage, so it might pop up a little bit here. But that's the 15-minute opening range break trade. Some people will ask, when do you trade it a second time? The only time I would trade it a second time is if we had come up here, I'd taken profits down here, and then we come up in here and we break to the opposite side that we originally broke. Like if you get a really, really rangy day, that's when I would take this to the upside. And and I would trade it again in the same manner. And I'd be looking for 50% of the credit would be my profit target. And on the second one, I probably wouldn't let that ride. I would probably definitely be taking that one off, right? And so sometimes you can let it ride and get the full credit, right? Usually that's when I'm using the Volt and I'm making sure that we're on a trend day. And, but if you look at this one yesterday, like it felt like you could have left it on. And then right at the end of the day, if you had left it on here at 63.10, right? We ended up closing below that, right? And so this would have looked really good, really good, really good all day. And then it would have rolled on you potentially, and it would have closed outside the spread range, and it would have been a max loss. And so the key to these is because you're trying to get $1 or thereabouts, right, in credit on a $5 wide spread, it means your max risk is around $4, right? Because it's a $5 wide spread. So if you get 90 cents, you're risking 410, right? If you get $1.10, you're risking 390. That's how this works, right? So what you don't want to do, even if this is a 75 to 85% win rate, right? If your every win is $100 per contract and every loss is a max loss of $400 per contract, you're not going to be making a whole lot of money, if any, at 75%, right? So you really have to understand, in my opinion, you really have to understand how to get in and out of credit spreads and how to manage those. Other people ask, do you market into these credit spreads? Absolutely not. You're going to get some awful fills if you try to market in. So you need to be able to know how to put a limit order in for these credit spreads, and then also also be able to change your order if it's not filling, right? So if you put a limit order in, if it's going against you, I usually put my sell order in for profits as soon as I put the trade on, and then if it comes and gets me, it comes and gets me. But if it's going against you, you want to make sure you know how to change your limit order to get the best fill, versus trying to market out of something, because you can get a pretty awful fill if you're going to market out of spreads. Does anybody have any questions on the opening range break? I play these every single day, and I put them here in chat. And, they usually look like, it's just SPX, 15 minutes, ORB. A lot of people ask what ORB means that hasn't seen it. That's the opening range break. And then I'll put, 6,300, 6,305, put credit spread. That's how I'm entering. That's not an actual order, right? I'm just showing you what that looks like. But that's what it'll look like. So it'll give you the 15-minute SPX opening range breakout. It'll give you the type of spread that I'm doing. And if I'm not on mic, that's the only way I can put those in. So But the funny thing about these is they're so incredibly simple that once you learn how to do them, you don't need someone to announce them or to post them, right? They're just, it's just a very simple, intuitive way to make some income. Polaris, I am adding the 1 hour opening range break, and I'm actually trading those long, or you would just long puts or long calls. But I don't have enough data on that to give you any kind of percentage information because I'm just screwing around with that. But the 15-minute opening range break with credit spreads is, the framework, the basis of this edge that I'm using. Any other questions? Would it be safer to move the credit side of the trade to out of the money by 5 points? Most of these are out of the money on the credit side, right? Most of these are generally like a delta 30 is the one you're selling because you're catching a bearish break, but you're selling a spread here when your price is here. So you are selling out of the money. So I guess I don't understand the question. Move the open or close line parameters, like move them closer or move them even further. Like if you move them even further away, right? You're just going to get less of a credit. Yes, it's technically safer, and you could you could take more contracts, I suppose. Um, but the idea is just to catch that initial opening range break move and take your 50% of your credit, and go home. Like I've had days where as I said, I'm using this as an income strategy in a couple different accounts, and you know if it's going to be a busy day or there's other things going on or whatever, I'm here on the West Coast, so like market opens here at 6:30. I'm usually done trading my major trades by 8 a.m. and then I'm just either messing around or coming on mic or whatever. But you can give you back the rest of your day, kind of. So, which is kind of cool, especially if you're going to have a busy day, but you'd like to make a little bit of money today. That kind of thing. Like, oh God, I've got so many things going on today. I'd like to make a little money, but I don't want to sit in front of the computer all day. It's just a great strategy for that. Come in, focus on one thing, get your hit, get your income for the day, and then get out of here. Yeah, you can also play them with just puts and calls in a cash account. You can also do spreads in a cash account, Crow. That's that. You just have to have option level 2. But the only issue that you run into with playing them with calls and puts is that now theta is working against you instead of working in your favor. You have a higher potential for a larger win. But if things kind of go sideways a little bit or reverse on you, you don't have theta to work in your favor. It's working against you at a pretty rapid rate on a 0 DTE. Yes, there is a way to put OCO on a credit spread in TOS. I would, and I haven't done the full OCO if this one cancels the other, because I'm just kind of around during the day, and they're not so volatile that you can't, step away for 20 minutes or 30 minutes and all of a sudden you're going to lose your shorts. I mean, unless some news comes in or something like that. They're generally pretty easy to manage. So I haven't done that yet, so I can't give you the absolute details on that, but I'll look into that. I'll look into that, and I'll maybe do another lesson on how to do a full OCO order. So you just put your trade on and walk away. SPX on the Thinkorswim, just type in SPX. If you're on the actual Schwab site, I think it's SPXW or $SPX. Yeah, there you go. Okay, any other questions? It's basically 50 and 100, Chiller. So I'm looking for 50 to 55% of the credit, and I'm taking it off for a stop at double the credit. So, like if I get $1, I'm taking it off if at $2. And then because I got $1, I'm only losing $1 per credit spread. Right now it's at 87. Maybe with today's it's at 88% win rate. And that's just my win rate. I know there are people that have this sitting at like almost a 90% win rate. But early on when I started tracking these, I was playing with a couple of different entry parameters, and so I think I had a couple of additional losses that shouldn't quite be there. But 87-88% is where I'm at right now. So I do, yeah, Mark, I do. I know people that have been doing these for 4 to 5 years and still have a high 80s win rate. Yeah, 15 minutes is the one I found to be the most successful. There is some data in back testing that the 1 hour is also opening range breakout is quite strong and quite successful. So you can also do this on a 1 hour, which is why I'm kind of playing with both. Well, your average dollar win is going to be, roughly 50% of your credit, and the average credit is about $1, right? And your average loss is going to be, you know, probably that full credit of $1. So, I mean, I'm not calculating that average win, average loss, but I can find out if that's important to you. I mean, and it obviously it varies a touch because sometimes you're getting 80 cents per credit, and other times you're getting, $1.50 or $1.30. Yeah, no problem. I mean, I'm always looking for ways to, um, to add more edges, but then also to simplify the trading process, not only for myself, but for all of you that are learning in here. Because if you have something that's simple and easy to follow, that can provide you kind of daily winners. It keeps you in the game longer to learn the other strategies that are a little bit more volatile and take a little bit longer to learn and get good at. Yeah, I do. Lucky, I do sniper trades in addition to this. Yep. Not in my small account. My small account, the one I'm doing right now, this or the smaller account is just these once a day unless we get a double break. Um, and that one's just basically an income based smaller account strategy. Yeah, you could look at a $10 wide spread if you wanted to. You'd just be putting more at risk. You'd get you'd get a larger credit depending on where you put that. But I've just been doing the $5 wide spread, and it's been working great. My current Vold reading, is that what you're asking? Yeah, it's at 2.21. Right, which is why I'm probably going to roll out of my larger opening range breakout credit spread, because I'm just not trusting this sideways action here, and I'm not trusting it to break down because the Vold is positive, the advanced decline is positive, and the ticks for the most part on the day have been positive. It's not giving the signal for a trend up day, but it's definitely not giving the signal for just sort of an overall down day. And I'm already past my profit target. That spread is currently sitting at 50 cents, and there's just no risk. There's no sense in risking that going to zero. Like on that one, like normally I say, okay, my stop loss would be 2 times the credit I got. So in that case, it would be $2.60. But if I've let it go this far on the day, and it let's say it starts to go against me, I would take this off personally at this point. If it were to really start moving up against me, I would take it off at basically break even. So I would take it off for $1.30, because there's just no sense in the ones that reverse on you kind of early, and you need to use your stop loss. I think it's important to manage that stop loss and not sit and watch it tear you apart. But if you've taken the chance to let it ride this far into the day and it starts to go against you, that's when I would take it off. Basically break even. I've done that before on one of my losses. So of that 80%, 87% win rate, I'm counting like one or two losses that was like a $25 overall loss, because I took it off at break even. I'm counting that as a loss. So those are not full value losses. Well, $10 isn't going to have less commission because you're selling the same. You're buying and selling the same amount of contracts. I mean, unless you're doing it from a P&L perspective, but if you're selling a one credit spread at $5 credit spread, or you're selling one $10 wide credit spread, the commissions is the same. Mike, no, I don't roll profits into more contracts. What I'm doing is like I started out doing these with one contract, right? And then I had like 5, 6, 7 winners in a row. And then I had a loser, right? Because you're gonna have losers. And then so directly after that loser, then I doubled it, right? And so and then I can't remember, I'd have to go back to my charts, and I had like 3 or 4 winners in a row, and then I had a loser, and then I doubled it. So I'm excited to for my next loser, which is kind of an interesting thing to think about because that I'm gonna size up again. So that's kind of how I went about sizing up. Because the losers sometimes, and I've had 2 losers in a row before, so that it's not like it's every loser is followed by a winner, but with an 87% win rate, you probably the statistics are in your favor that after a loser, your next one is most likely going to be a winner. And I'm saying that statistically. I'm not saying that as fact. RJ Duel, would I do a put credit spread on the SPX right now at 90 cents? What's the edge? What edge are you looking for? 62.80. 62.85. So you say you're hoping it's going to finish above 62.85. Yeah, I don't. There's no edge there for me. Yeah, so I don't know what your edge is. What are you playing? Are you playing that you don't think the SPX is going to break below today's low? Yeah, no, I mean that would be a speculation trade for me, and I've been kind of watching for this. I missed that sniper. So no, I wouldn't. Yeah, but if you think it's gonna hold above today's low, then sure. But that's not one of my strategies. What credit do you get, and do you think? Oh, I already answered that question, I think. Okay. Any other questions on the 15-minute opening range break before I stop this recording? Okay. I'm going to stop this recording, but then I'll stay on the mic for a little bit longer.